Hi, everybody. It's Peter Schiff. It's Friday, August 17th, 2012. I want to start by talking about a comment that was made early last week by not a sitting voting member of the FOMC, but the president of the Federal Reserve Bank of Boston. The guy's name is Eric Rosengreen, and though he doesn't vote now, he will soon. But I think his comment is very revealing, and it really shines a light on the way a lot of people, I believe, unfortunately, at the Fed do think. And this is the quote. I'm actually going to read it because I don't want to get it wrong. Here's what he said with respect to quantitative easing. He said, quote, "What I would argue for, actually, is to have it open-ended, that we focus on economic outcomes. It would be setting a quantity that we're going to continue to buy until you get the economic outcomes that you want." Now, the quantity that he's talking about buying is treasuries. And, of course, the Fed prints money to buy treasuries. So what he wants to do is he wants the Fed not to have a monetary target, like we're going to buy $500 billion in treasuries, right? But an open-ended commitment to buy as many treasuries as they have to print as much money as they have to until they get the outcomes that they want. And of course, what are those outcomes? Economic growth and job creation. Well, you see, here's the problem. It doesn't matter how much money they print or how many government bonds they buy, they're never going to get those outcomes. In fact, it's the reverse. The more the Fed stimulates with quantitative easing, the less likely it is that they're going to get those outcomes. It's really like trying to put out a fire with gasoline. And what you're committed to doing is pouring as much gasoline on that fire as you have to until it goes out. Well, if you keep pouring gasoline on the fire, it won't go out. It's going to get bigger and bigger and bigger. But if you're saying from the beginning that you're never going to question your methodology, you're never going to stop and question the wisdom of throwing gasoline on a fire, you're just going to keep on doing it, and you're going to ignore the fact that the fire is getting bigger and bigger and bigger every time you put gasoline on it because you're convinced just a little bit more gasoline and that's going to do the trick. This is the problem with the Fed's approach to trying to stimulate the economy. We're never going to get economic growth. We're never going to create jobs until the government and the Fed get out of the way. Yet all they do is they do QE1, they do QE2, and then the economy is not recovering. And it doesn't dawn on them to think that maybe their quantitative easing is the reason the economy isn't recovering. Of course, they don't understand that it was quantitative easing that made the economy so sick in the first place, which caused them to conjure up quantitative easing as a remedy for a disease that they inflicted us with. But they're never going to consider that. They're just going to have an open-ended commitment to repeat the mistake over and over and over again. And I guess in my example of a fire, I guess they're going to throw gasoline on the fire until it burns everything in sight, including the people who are throwing the gasoline on. And ultimately, that is what's going to happen. And if you weren't convinced before that this is where we're headed, all you have to do is now look at the political debate that's going on right now between the President Obama, and Mitt Romney, and of course now Paul Ryan, his vice presidential pick. Now, when you first heard the name Paul Ryan, you might have thought, hey, this is a good pick because Ryan, he's the guy that wants fiscal responsibility. He's the guy that's voting to balance the budget. And that was the original spin when we heard about the Ryan pick. The problem is that's not Paul Ryan, at least not the Paul Ryan who's been in Congress. I mean, first of all, he voted for TARP. He voted for the auto bailouts. He voted to expand Medicare. I mean, he's voted for all these big government spending bills in the past. And even if you look at this Ryan budget that everybody says is so draconian that he's gone overboard, right? He's really taking a meat cleaver to government. I mean, I wish that were the case. Somebody needs to take a meat cleaver to the government, but it certainly isn't Paul Ryan. He's not cutting anything. If you actually look at his budget, it only assumes that the budget is balanced in 27 years. 27 years. So in other words, Paul Ryan, the supposed fiscal conservative, is advocating 27 more years of deficit spending. What's conservative about that? In fact, There is not one year in the Ryan budget where the government spends less than it did the year before. Nothing is cut. In fact, he goes out of his way to not to cut. All he's talking about is making the government grow at a slower pace than it is currently projected to grow. Only in Washington would that be considered a cut. Of course, the only reason that the budget eventually balances, 30 years from now, is because of the economic assumptions that he makes, not because anything is actually cut. For example, they assume that the unemployment rate falls down to, I think, 2.8% in less than 10 years. 2.8%. I don't think it's been 2.8% in my lifetime. Yet somehow it's going to do it within the first 10 years of this budget. Also, they assume 4% economic growth every year. I mean, come on. I mean, that's how much we were able to grow before we had all these headwinds of big deficits, of all this government regulation, Obamacare coming down, all this stuff. How are we going to grow at 4%? And if you look at the rest of the assumptions, he assumes, at least for the first 10 years, that inflation stays below 2%, even though we have all this money printing, we're going to get us all this GDP growth, consumer prices aren't going to go up. And then when it comes to interest rates, he assumes that the yield on the 10-year Treasury stays, I think, below 4%. 4%. So we're going to have 4% economic growth, right? We're going to have unemployment below 3%, yet we're going to have interest rates stay near historic lows. I mean, yes, he has them going up a little bit, but gradually, and still topping out at, 4%. This is all fantasy land. None of this is going to happen. So the reality is, Ryan doesn't want to cut anything. Yet despite the fact that he doesn't want to cut anything, the Democrats are jumping all over him for slashing the budget. And what really should bother you, right, is the debate, how the debate has quickly changed since Paul Ryan has been nominated, right? We've actually lost this battle before it even began. We now have a debate between the Republicans and the Democrats over who likes Medicare more, over who we can best trust to preserve Medicare and not cut it at all. Right? Even in the Ryan plan, he goes down and says, look, we're not cutting benefits for anybody under the age of 55. Well, it's the people who are 55 and older, they're the problem. The people that are getting Medicare right now and who are about to get it, they're the problem. How can we address the deficit without making reductions in that program? The same thing with Social Security. Of course, Social Security is also off the table for both Republicans and Democrats. And of course, everybody wants to spend more on national defense. Interest on the national debt, well, you can't do anything about that unless you're going to default, so that keeps going up. So there's nothing left. I mean, the budget is tiny once you exclude those four components. And the problem for me, right? I mean, I want less government. I don't care if it's the Democrats or the Republicans that give us less government. But the Republicans promise less government, but they never deliver it. But here's the problem with this debate. As I said earlier, we now have Republicans and Democrats debating over who is going to best defend Medicare and maybe Social Security. Well, who is the public going to believe? Are they going to believe the Democrats who love government, who tell us that we need government for everything and that the free market doesn't work, that capitalism is bad, that the 1% are greedy and getting rich off of the hard work of everybody else, that businessmen don't build their businesses themselves, they get a free ride based on all the hard work that the consumer does and the government does by spending money and building schools and roads? Are they more likely to believe that those people aren't going to cut Medicare or Social Security, or the people who tell you that they believe in the free market, that they believe in the individual, that they think government is a problem and that government should be smaller? Are those the people that you're going to trust not to cut Social Security and Medicare? Of course not. See, the minute the debate becomes between a Democrat and a Democrat, the Democrats win. And the Republicans now are unfortunately fighting the Democrats' fight. It's not over the economy, it's now over Social Security and Medicare. And why are they fighting over these things? Because everybody wants the votes of the senior citizens who are collecting these benefits or about to collect the benefits. Nobody cares about the country. Nobody cares that we're broke. Nobody cares that we can't afford to keep these promises and that we need to make these cuts. No, all both sides care about is who wins. And how do you win an election? You buy it. You pander to the people who are feeding off the public trough. And right now, I think you have better than half of American citizens getting checks from the government. Whether it's a welfare check, a food stamp check, an unemployment check, a paycheck, a pension, Medicare, Social Security, these voters are now bought and paid for and will suck the life out of the U.S. economy. And unfortunately, the only way that we can keep these promises, and of course I put that in quotes, is to run up the printing presses, to do exactly what Eric Rosen said, to keep on doing QE, not because it's going to bail out the economy, but because it's going to bail out the politicians, at least in the short run. It's going to let them keep all these promises with practically worthless money. That's where we're going. We got it from the Fed. We know it from the politicians. Don't hold out any hope that if Romney wins, and it's, who knows? I mean, given the argument now, even though the economy is going to be in worse shape in November than it is today, it still might be hard to out-Democrat Obama. But even if he wins, don't hold any hope that this is going to be morning in America, that it's going to be like a Reagan-esque recovery. It can't happen, and it won't happen. The U.S. economy is in much too bad shape today. We're in a much deeper hole. We don't have the ability to come out of it the way we did back then. We have to recognize the severity of these problems. Remember, during the Reagan term, we had a lot of people that started out unemployed, but there were plenty of factories there for the unemployed to go back to work to. Those factories aren't there anymore. And part of the Reagan prosperity came from borrowing, right? We started borrowing. We were running trade surpluses. We ran deficits. We started out as the world's biggest creditor nation. We began to cash in those credits. So we started to live beyond our means. So we had the ability to borrow and spend. So some of that growth was phony. But we don't have the ability to do that anymore. We're already broke based on all the borrowing that we did, not only under Reagan, but under Bush Sr., Bush Jr., Clinton, Obama. We are flat broke. We can't borrow more. And of course, in the 1980s, we still had a lot of women that were entering the workforce, that were leaving their homes and going into the workforce, and we had that extra productivity to give us a boost. All the women are already working, or at least those that can find jobs. We don't have that spare laborer that's going to come out, off the bench and onto the playing field anymore. So we're already broke, and we don't have the ability. The only way we're going to have a recovery is to do what the Reagan administration failed to do, and that's slash government spending, abolish a lot of these agencies and departments, get rid of a lot of the regulations, and allow interest rates to go up, shrink the government, let the chips fall where they may, clean out all the malinvestments, let bankrupt companies fail, and start over with a clean slate. That's what we need to do. Unfortunately, that is not on the horizon. I think the only way we're going to do the right thing is in the aftermath of a crisis. And I guess the good news is that that crisis is going to be here very soon. The question in my mind is who gets the blame? Is it big government or is it the free market? We know it's big government that caused it, but unfortunately a lot of the voters, they're easily fooled and they believe that it's the government. And it creates an environment where the politicians can offer themselves as a solution and just convince us if we just give up a little more security, if we give up more of our liberties and more of our rights and surrender more power to government, that government is going to save us from this calamity, even though the government is the cause of the problems and more government will never be the solution. Moving briefly from politics back to economics, a rather significant event in the bond markets, I believe, in the last couple of weeks. No one's really talking about it because the yields are still low on a relative basis. But look at the yields on treasuries. The 10-year has moved from a low of about 1.4 2 weeks ago to almost 1.9 this week. On the 30-year, we've gone from 2.4 to just under 3%. And while 3% on a 30-year and 1.9 on a 10-year are still very low, they're not nearly as low as they were 2 weeks ago. That is a pretty substantial percentage increase. The question is, where do we go from here? I've been, talking about the bond bubble bursting for a long time, and I don't want to be like the boy who cried wolf and say, look, this is it, the bubble has burst. I don't know that for sure, but it is very suspicious that it might have happened. I mean, one of these days, the bond market is going to drop and then keep on falling. We might rally back. I don't know. I mean, there have been some false tops that it looked like the bond market has been making. But remember, this is the biggest of all bubbles, and so it's probably the hardest to call the top. But I think when it bursts, it will be more spectacular than the bursting of the real estate bubble or the stock market bubble, with much more ominous consequences for not only investors, but of course for the U.S. economy. So watch what's going on in the bond market. Is the QE finally starting to catch up with us? Also, if you look at the foreign exchange market, the dollar is really no longer trending up. In fact, it's been trending down. It hasn't collapsed, but the trend is down. The trend also in gold is up. Look at the last 2 weeks. The yellow metal continues to rise. We've now found out that George Soros and John Paulson, two big investors, maybe from opposite sides of the political spectrum, but they apparently now agree on one thing, that gold's going higher, and they're buying a lot more of it. And I remember not too long ago, George Soros was calling gold the biggest bubble out there, yet we now found out that while he was talking it down, he was buying it for himself, because that's a common, I guess, strategy on Wall Street. If you want to buy something, convince other people to sell it, and then you can buy it at a good price. More significantly, though, I think in the commodities markets, look at these agricultural commodities. They continue to rise: corn, wheat, soybeans. I know part of that is the dry weather, the drought, but it's not just a shortage of rain. It's a surplus of money that is driving these commodities higher. Significantly, I've been talking about the oil market. I call the head and shoulders bottom in the oil market some time ago. We're now up above $96 a barrel. We've been trending higher now for weeks in oil, and I've been saying that I believe that gasoline prices, which have been rising even more sharply, pump prices, than crude prices, that they are going to be a much bigger issue in the November election than people think. I think Obama is now starting to get worried about how voters might take out their frustrations with pump prices at the polls. Obama is now thinking about releasing oil from our strategic petroleum reserve. Now think about this. This is set aside for an emergency, a disruption of supply. We haven't had that. We got plenty of supply. The problem is we have plenty of supply of money too. We have more money than oil, and that's why prices are going up. But Obama doesn't want the voters driving to the polls with $4 or $5 gasoline, whatever it is. He wants to make it as cheap as possible so they're in a good mood when they pull that lever, or they favor Obama. So he might release this oil. Now, I think it will backfire on the president, because I don't expect it to make much of a difference. I think we can still see the price rise. But it shows you where the president's head is. This is for an emergency. Well, for Obama, the emergency is I might not get reelected. And so in order to reelect himself, he's willing to sacrifice the crude oil that we have for an emergency. Because what happens if we release the reserves and we keep doing that when there is no emergency, when there is no shortage? What do we do if there is a shortage? What do we do if there's a war or something that legitimately disrupts supply? Meanwhile, the strategic reserve was blown helping to reelect President Obama. Well, that about wraps it up for today. Don't forget, if you want more frequent updates on my thinking, what's going on, you don't have to wait for a video blog. Just go to schiffradio.com. I do my radio show every weekday from 10 a.m. to noon. I also take calls, so it's not just a one-way conversation. If you have questions, you can call me and ask them. You can also, listen to other people's questions live. And if you can't listen live on schiffradio.com, you can become a member. There's free archives. You can listen to the show at your leisure. Also, if you haven't picked up your copy, my newest book is The Real Crash: America's Coming Bankruptcy, How to Save Yourself and Your Country. The book is becoming more relevant every day. So if you don't have a copy, I would suggest that you pick one up. In fact, encourage your friends to do the same thing. Anyway, bye for now, everybody.